We're looking at the Kiwi dollar here. Right, we're in a strong downtrend, daily time frame. In fact, let's just go out and I'll give you my top down. Have a look at it on the monthly. It's pretty important. I want to be in sync with the monthly trend, and we can see that this is definitely bearish. It's under pressure. Strong monthly candle. Coming to the end of the month now, we've got a bit of a wick under here, so where to from here? I'm interested in this huge candle here, under here that we've got. Well, we had stops resting under here. They've been taken out. Trades down, taps into it, pulls back up. And now, is that enough to send this further north? That's my question. So we'll go to the weekly time frame. We can see, okay, this wick under here, these stops from back here are tapped into. Let's just pull the fib from high to low. I'm always looking for the pullback into this area here. So an ideal entry point on the weekly time frame, if you want to trade this on the higher time frame, we could set up a pending short weekly, even slightly under here. Stop loss above. And where am I going to go with my target? Well, this price swing back here, we've got this low here. So I'm going to be looking for this as a target area. So that's a weekly. Accumulation range back in here weekly. Perfect target. However, in saying that, I'm always going to look to take 2/3 of my position off at 1-to-1 risk reward. That's the first thing I'll do. And at that point, this is then a winning trade. You pull your stop down behind the previous high and it's happy days. So that's the idea on the weekly. Pending sell. Now, we don't know if this is going to have a shallow pullback and roll over. So we could look at this from then trading it from a daily time frame perspective. There's two distinct levels here. We have this distribution that we've already moved into. So that tells me to short it right now. Market entry daily time frame, which I have done. So I am short Kiwi dollar, but understand the risk. Understand the risk. Look at this. See this thin candle here? We've got this liquidity void all through here that this will at some stage target. So understand the risk. It's possible that at some stage this travels up and looks for that. So I'm always going to go in with a conservative position size. And I've done videos, I've talked about how I manage my risk numerous times before. So you can trade that on the weekly with a pending sell, wide stop, target down in here. That's one thing. Then we've got the daily time frame. Now, there's two levels here. How far does this pull back? Good question. Anyway, my daily time frame setup is going to be a market sell, given that this is retraced, and stop above these highs pretty much. From looking at it on the weekly, it looks like it wants to, or it could, retrace higher. So you have to go in with a conservative position size, 0.1% of your account or 0.2%, something like that, because there's always a chance that this stop gets taken out. There's, an argument for and against. I'm covering both scenarios. Given that this is under pressure as it is, it could roll over here at this level and continue south. So this is why I want to get my feet wet with a small position. And, if it continues on, then we'll build on the position, just keep adding to it and following it down with a stop loss. And then you're in the money. So I hope that makes sense. My target, of course, is going to be down here. We got nearly a 4-to-1. Let's just call it. There it is, 4-to-1 risk reward on this one. And this one back here, it's 3-to-1 risk reward for the weekly time frame. And the other thing I'll be looking to do will be to, now that we've entered this market sell, this is going to be T1 down here. Go 1-to-1 risk reward, take off 2/3. See, and once you do that, this is profitable. That's it, done and dusted. 2/3 off here, and then we pull our stop loss down behind this where we entered and let it run. And if that gets taken out, we've made money. If it travels south, well, it's a great outcome. So that's my take. And seriously, look, while this trend is trending and you've got 1/3 of your position running, why not just keep extending your risk reward here on 1/3 of your position? Go for broke until you see a break of structure. And that way you maximize your, look at this trend back up in here. Here it is. See, you enter, you take off 2/3 and stay in it until you actually see this thing shift gears on the weekly time frame. until we see it actually roll over and trade north, break of structure. And that's a very, very big payout, guys. So that's my take on the Kiwi dollar. It's under pressure. Trade safe. Don't go in with crazy big lot sizes. Keep it consistent. It's the secret to being successful as far as I'm concerned. So yeah, comment. Love to hear your thoughts. Click the link below. Join Telegram. There's a free Telegram, and there's other links that you can have a look at. Righto. Hope you have a great day. Safe trading. See you in the next one.